Welcome to the Black Heart Red Spade podcast. This podcast features long-form conversations with accomplished guests from across the globe on topics ranging from financial markets and trading to psychology, entrepreneurship, and life in general, with your host, Adrian Alberts. Derivatives trading carries significant risk of capital losses and is not suitable for all investors. Past performance is not indicative of future results. All views aired by participants are their own and intended for informative and educational purposes only. Always consult with a registered financial or legal advisor before acting on any topics discussed. My guest today is Adam Fiske, the founder of Boss Trading in Australia. He has multiple decades of trading experience. He's a very well-renowned trading coach. I just had the most fascinating conversation with him pre-recording, and I absolutely cannot wait to share this with you guys. So thank you, Adam, for joining me. It's such a pleasure to have you on.
Adrian, it's fantastic. And to think I'm in Melbourne, Australia, and you're in South Africa.
Yeah, in Cape Town, South Africa.
This is the amazing thing about the times we live in, that we're just having a casual chat as if we're at the pub.
Yeah, totally.
Do you call them pubs in South Africa?
Yeah, well, some people do. I think it's because we're also a former colony. So some people do call them pubs. Other people call them bars, you know. So it's a bit of a dichotomy between American and the British English and all that. But, you know, Adam, I think, you know, having our chat beforehand and just seeing where you came from. I mean, you came from a musical background of all things, you know, and then you got into trading. I think, please tell the listeners how you got into this game, you know, via music and all that.
Yeah, sure. So it's obviously a very unconventional path. And I certainly, when I was at school, and I was really quite clear about wanting to go on into music, because that's what I did best at school. I wasn't a physics 1, 2, biology, maths 1 and 2 elite star by any stretch. So I saw the guys that go off and went to Goldman's and Solomon's and things like that. And then so I went into the music career, and I grew up in Adelaide, went to Adelaide University, but then moved to Melbourne because Melbourne's really the heart of the music industry. It certainly was back then, and this is in the very early 90s. But after years of playing and gigging, it's a pretty tough type venture, and you know, you start to, like, I loved it, don't get me wrong, I loved it, but in an effort to have some more security, I ended up working in audiovisual, I guess their connection there with music, and eventually working in automation. And through that, had a lot of clients that, across all industries, but certainly some that were operating hedge funds and things like that. And that's what really piqued my interest. And so from there, just working with clients, working in, even doing the video and screens and things for trading rooms, I was just fascinated by the technology, I think, more than anything else, and was dying to transition into trading. And so I really went about it the long, hard way. I think my path is probably no different to many, and in an effort to learn, and you need to get around the right people, and you can't just go to university and do a bachelor of trading.
No,
you really need to get into the industry. And certainly, with my background, I wasn't about to walk into a Goldman Sachs or something like that.
oh, neither would
so I did it.
I had a similar thing, yeah. So I can relate.
And so it's not uncommon for guys to go into stockbroking, and from there, that evolved to managing money. Once you've obviously developed, this is not something that happens in 6 months, obviously, this is over a journey of years, and then actively trading for wholesale clients. And then as my interest developed more into shorter term trading, I moved across to trading for a proprietary firm. And I have to say, that was like being around other traders and people who are really experienced is so important for someone's development. And this is why I feel for a lot of retail traders that they don't have that exposure. So it's really, fast tracks your learning curve. But when you go into a prop firm I mean, I had one of the guys that's, on chat with traders that although he didn't work in the same state, he'd offer come down. And that's the sort of caliber of people you're surrounded by and every day. And just the habits, also the specialization, the unique skill set, having what we often now refer to as a playbook, trades that put you in unique situations where you have an edge that other traders don't have. All of
Yeah.
these things really that built the foundation of what I do now, which is trade for myself. And also you mentioned coaching, Adrian, and although I trade full time, so there's if I'm not at the screens, I'm not earning. I do make an effort to work with a small group of clients, which I do one-on-one. So I give them opportunity to watch me trade during the course of the week, because that's how I learned, by being around others and having them explaining it to me, but also then working with them one-on-one so that they can ask the questions and I can pick out what they're doing with their trading. And it's not something that you do for a three-day seminar. It's certainly it's the best part of 12 months. So not everyone's cup of tea to do something that takes 12 months. But having said that, we were chatting before about retail traders, and I had access to, when I was broking, it was like about 6,500 self-directed traders. And many
That's
of
a
those traders,
freaking large sample size. My
yeah. So
goodness.
I wasn't just looking at a sample size of 3 or 4, like it was a really,
No.
really big sample size. And people, we can argue the finite numbers. Oh, is it only 5% of traders who make money, or is it 7.5%, or is it 12? Whatever it is, what I certainly saw is that the majority lose. And some of this stuff from a legislation point of view, particularly in Europe, you can have a look. I don't want to mention names, obviously, but if you look at some of the brokers, they actually have to now,
Yeah, they disclose it.
yeah, they
And
have to disclose it.
76% of people lose money is actually the average figure that I picked up. It's about
Okay.
76. Yeah. On
Yeah, so
these.
I've seen 79s.
Mm, mm,
It's nothing under 70, and a whole bunch of things in the 70s. But what people don't realize is that's not just in one year. That's year after year after year after year. And so that's why when you think about how, professional firms operate and how they bring on traders, they're certainly very clear to you that you're not going to be making money in 2 weeks. You might be live trading with inside a month, because they want to be able to sort out who, the wheat from the chaff
yeah.
in terms of who's got some, what's a nice way of saying it? Who's perhaps comfortable being in the unknown and having risk on the line.
Who's essentially got the, I don't want to say use the word edge, but more who's got guts, because it does take
Yeah,
guts.
that's a really good way of putting it. So you're
Yeah.
inexperienced, but they want to show. Well, you have to demonstrate that you're prepared to back yourself. I think is probably the best way of
Oh
putting
yeah.
it.
Oh yeah.
And ironically, you don't have a lot to be backing yourself with, because you're so early into it. But one thing they do make clear is, yeah, you're not going to be making money for at least 9 months to 12 months. And that's in a professional environment with the best conditions. And that's the same for every professional firm. You're always going to have outliers. Some will take much longer, and some will actually get there faster. Those that often get there faster have got onto something, and then it quickly, it doesn't work anymore, and then they've actually got to step back, and it takes them longer. But I've gone off the track a bit here. In fact, I'm not even sure what the track was.
No, this is no,
to be honest.
this is a very useful track, because you were talking about the 6,500 directed traders and all that, and how many of them lose money. So it's very useful, because I don't think. Sorry, Adam.
Yeah,
because
go for it.
something also just occurred to me while you were saying that. When you step into, because let's face it, the market is like a big coliseum. And as traders, we are essentially financial gladiators in a way. And I don't want to make it sound like we are actually getting guns and shooting people and stuff, but we are fighting a battle in some way, shape, or form. And the battle is mostly against ourselves. It's against our lower selves. Because you often have to do the opposite of what your nature is to actually end up making money in this game. So I do think that it's a very important point that you raised over here, that you don't know how vulnerable you are when you first step into the pulpit.
Yeah, that's a really good way of putting it. That you don't know how vulnerable you are. And so one of the it's not a hard and fast rule, but as far as working with clients, my preference is to work with someone who has been beaten around a bit, because it's only once you go through that experience that you actually have respect for the market and just how brutal it can be. Because if we look at our own experiences when we first went in, we thought we were quite invincible. And that's pretty normal, isn't it? It's human nature. And so you need to take a bit of a hiding, and more than one, to realize that, okay, there's two paths here. I can either walk away from it, or I've got to put my head down and probably have to put a fair bit of work and effort in, and some further discomfort, no doubt, to move forward. And so with that, 6,500 clients, one of the things that is not unique, it's the same for all of them. Many people think that, and you see this all the time actually on Twitter and YouTube, people tend to feel that their issue is to do with either their psychology or their money management. If I could just sort out but in reality, what it really is about is that they just don't have an edge in the markets. And it's understandable, because when I was at a prop firm, and I'm sure it's the same everywhere, you have to sign a non-disclosure agreement. Why? Because it's, as you said, it's like a coliseum. It's a competitive environment, and you don't show. If you use the card analogy, you don't sit there and have your cards facing your competition, because you're trying to outplay the other players. Yeah, you're dealing with yourself, but you're also have got the opponents that you're competing against. And so the lack of edge in the market for participants is the biggest issue that I see. And what's interesting too is that that's probably the cause of 90% of trading problems. It certainly causes many, right? So it spawns the majority of problems that people think they have. And so there's one of the things I was conscious of, Adrian, is if other traders are listening to this, it's all very well to talk about all the things that don't work, but I think we want to try to also perhaps highlight some things that aren't obvious, because as you touched on, a lot of things are counterintuitive in the market. We also want to know some ways in which we can fix those things. What are some of the ways in which traders can actually make differences in their trading if they've got issues that they're trying to overcome?
Oh yeah, no, of course. And I do agree with you. It's that what I've noticed with the way that my mind works too. So I'm slightly on the autism spectrum, in terms of how my brain works. So I'm not officially diagnosed, but I know that I've got many symptoms.
It's self-diagnosed.
Yeah. I'm self-diagnosed. So I know that I've got quite a few symptoms of what people used to call Asperger's syndrome. I mean, it's not debilitating to my life, but I just know that my brain functions in along those tracks. And what I figured out with myself too is that once I know how to deal with a problem or what is causing a problem, then my progress accelerates in a hyperbolic manner, because then I know how to address it, how to confront it, and how to overcome it. But I think in trading, for example, as you said, if you don't have an edge, it's the same kind of thing. You don't know what you're dealing with. You don't even know what you don't know. And if you don't know what you don't know, how can you address it? How can you fix it? And I think that's kind of what you're alluding to, if I'm understanding you correctly.
Yeah, absolutely. So I think it's probably of benefit that we, to anyone that's listening, that we probably tick off some things that, and we know this from personal experience through our own trading journeys and being around other traders and seeing what has turned the lights on for them, different ways in which you can, start to make progress and get out of that group that I just alluded to in that sample size. Because that's, if you've been at trading and you're still at it several years down the track, you're either a masochist or you actually genuinely want to turn the corner.
Maybe I'm both.
You haven't given perhaps, but there's obviously there's a desire there to try and sort it out and get it right. And unfortunately, most people have got the incorrect diagnosis, right? Thinking that there's the things I've mentioned before, and so they're trying to solve this problem, but it's the wrong problem they're trying to solve. And why does the problem exist? Well, part of it is because edge is something that people don't really understand greatly, and also how traders find edge in the markets is or what their edges are is not something that you get up and scream from the rooftops, because you'll soon find out you don't have one anymore. But I think one of the and I'm just looking at some notes here because I wanted to make sure that I was constructive in that discussion.
I think no, it's fine. But I think one of the best starting points, perhaps, would just be to ask the question very honestly: what exactly is edge? It's a word we keep hearing, but there aren't that many people I find who can actually define it for you in a simplified and easily understandable manner.
Yeah. Okay. Well, that's a great starting point. So edge refers to something that if you repeat it over and over and over, it produces lasting positive results over the long term.
So positive
So that's how
expected value.
Yeah, which is positive expectancy, but not over a handful of occasions. It's got to be robust enough to do it in the hundreds to thousands of times. So that's really what an edge is. And when you think about just how many times that is, one of the benefits of intraday trading, obviously, is you find those numbers out much, much faster than if you're swing trading and things like that. And so even for someone who's like, oh, I don't want to intraday trade, your development in intraday trading is probably one of the best areas to build a trading career from, because you start to, your observations about the market and all of those things develop much faster, but also just your awareness of where you can find edge, which then you can extrapolate out to bigger, longer timeframes if you want. But that's one of the great things about it. It really is a learning accelerant, is intraday trading. So I don't want to force everyone down the path of having to sit in front of screens like you and I do all day. No. But it's a good, for me, it's a really effective place to start. And a lot of guys who perhaps don't trade intraday, they're still generally at the markets all day. That's where they started, in intraday, because it's such a great foundation for really developing your chops in a short period of time. So one thing that edge isn't is someone who does a whole bunch of trades, maybe it's 100, 50, 200, and they show profitability at the end. Who knows what actually contributed to edge a whole lot of different trades. So this is where there's some confusion about edge. I have edge is not because you took a whole lot of trades and were profitable. And when I mean a whole lot, I don't mean 10 or 15. I mean like a reasonable sample size. Let's say it's 50, right? Just as a hypothetical. If there are a whole bunch of different trades, there's no way that you can look at that and say with definitively that you've got edge. So this is where I think there's a big area of confusion. And one of the things that you'll find traders end up doing, and I'm sure you do this too, is that you can come down to specializing in a market, and then you'll actually have just a handful of particular trades, the same trade, that you take over and over and over again. So you might take that a couple of times every day, right? The same trade, which is, you're looking at getting up to the thousands over the course of the year. And that's how you get that realistic sample size. And that's how you build not only expertise as you're doing it over and over and over, but you're getting a lot of experience and building of confidence, like conviction in what you're doing, because you can see it keeps working all the time. And I think there's a great saying, not all movement is opportunity. No. So just because the market's moving, if you think of the market as one of the things I get traders that the first thing I get them to do is watch a documentary called Pokey Nation, because Australia is actually very good at developing pokey machines. We're one of the it's not a proud thing, but we're one of the leading developers of pokey software, believe it or not. A lot of Aussies who've left Australia to go to the States to write software for pokies. In fact, Australia is even greedier in terms of the payout. So if you put enough money through them, you do actually get money back, but it takes a clip, and that's why they're constantly used for laundering money laundering. But where you might get not 90 something percent back in the States, it's in the 80s here. So we're pretty greedy on our pokie machines.
Wow.
But if you understand how they're designed to play to people's natural tendencies, then you can look at the market is designed, it does operate in very much the same way, from the algos to even bigger players. There's a lot of, and think of poker, all the foxing and everything that happens by a large degree in markets. So the one way that you sidestep that is when you specialize in just a couple of trades that you know intimately. And then all that other movement, there's
A lot of
a
it's
move that,
noise. Let's be honest, it's
and
noise.
it can be some huge move that's taken off that you're not in. But if it isn't part of your playbook, that's totally fine. And I think that's pretty difficult for traders to first accept, that not all opportunity not all movement in markets is opportunity for your business.
I would actually even add to that by saying that there's always an opportunity in the market, but remember that opportunity is not always a positive expectancy. There's always an opportunity to get screwed over badly, and there are many of those opportunities that await you on a daily basis.
I guess when I think of opportunity, I'm thinking of the positive opportunity, the positive outcome. And so, there's certainly many situations that the market entices players to act, but it's no different to how the pokey machines, with the music, with the way that it brings up sequences of patterns and things, it's done on purpose to make people think, oh, now's the time. And this is what markets do as well. They do the same thing. So that's a quick look at how you can actually develop an area of expertise. But what about edge and implementing it? I would say that one of the problems with this concept of an A+ trade or a playbook trade, for example, is that then people think that you just sit at the markets and you look for that to arrive. But that in itself isn't sufficient. There needs to be a reason. So let's say you've got a playbook trade that you've placed that trade thousands of times, and it's for a move up to be exposed for a directional long trade. But you really need a reason for why the market should actually go up in the first place. You can't just see a whole bunch of things align and go, boom, there it is, I'm off. So this is what I see as tends to be missing, is you need a catalyst for the market to move. So therefore you need to be thinking from an idea perspective first, and then looking for the market to show you that, oh yeah, my idea is playing out, and then watch for it to align with a playbook trade. So a really basic example, I was thinking about this before I came on. So I just trade the Australian dollar futures, nothing else. So recently, as only like maybe 3-4 weeks ago, into this, so I trade the Australian dollar futures. So when the Singapore stock market comes online, there's this really erratic algo-based move that is quite often a reversion to whatever the underlying move is, that happens anywhere from about 17 minutes out until when Singapore opens, right? So that's what I know. So I know there's a catalyst for a movement, which is that. Now, it's not a very elaborate idea, and so it's tradable, and I can trade it. Can I trade it every day and make money? No, I can trade it, not get hurt, or I can make money depending on how the market plays out. Because remember, we're in the odds business, not the certainty business. But with such a simple idea, at least I've got something to work with to then be looking for the market to align with some sort of behavior that I've traded a gazillion times. Because it's quite a simple idea, it's not going to be in a really huge payer, is it? It's not a huge trade. It's more of a scalp to maybe it opens up a little bit. So but it's nonetheless a good place to start. And all of a sudden, now you're operating very differently to those that are just scanning markets looking for patterns.
Yeah.
You've already moved yourself ahead of a bunch of other traders. And if you think this is a business of, it's a competitive business, then
Competitive
you
sports.
want you need to have a competitive advantage. And so all the time you're trying to move further away from your competition and have and that's an example of how you might develop an edge. A more, I don't want to use the sophisticated as a word, a more elaborate maybe trade might be, Hong Kong has obviously a strong, well, I won't say obviously because you don't live here, but Hong Kong, China's a big part of like the interactions with Australia.
Oh
All right.
yeah,
So
I can imagine same time zone, same region, the whole works. And I mean, it's Aussie's biggest trading partner. So
yeah,
yeah,
that's right. So everyone knows that the COVID situation over there has put a lockdown on their economy. And what we've seen recently is some, pretty significant selling into that market. And then once there's a little bit of, and remember, markets are forward discounting mechanisms.
yeah,
So when there's some chatting and talking about the unwinding or the less severe sort of sanctions on COVID, there's an opportunity, even at least in the short term, for perhaps an explosive move to the upside.
yeah.
Right. So there's your idea. Hasn't happened, haven't seen it happen. But how can we maybe make that a little bit smarter than just going and trading in China? Because actually investing in China has all sorts of obstacles in itself, doesn't it? So there are
Loads.
numerous markets that act as proxies. So what you're doing is you once remove from the move, say in China, or for me, I focus more on Hong Kong. And then would be looking for something to show me that, okay, I can see that data, from just following basic, I don't need a Bloomberg feed for this. I can just tune into Twitter, and I know that there's talk about the opening up the economy. You don't have to be Einstein to realize that has bullish implications. And then you're looking for a proxy market where people might look to put their money to take advantage of it. And then you're waiting for that market to actually move in sympathy with your idea. And then you wait for that playbook trade to align with the movement. All right. So that's a bigger trade. Right. And so both these trades are ones I've made and continue to. With the latter, because it's got a few more legs to it, and it's a bit of a bigger picture view, it naturally pays a lot more. But in both instances, I'm not the person who's looking at scanning for a pattern. And this notion of, in both those instances, just trading a move, that's pretty dangerous because markets move between one price and the next an infinite number of ways, don't they? Some of those moves can be aggressive swings up, down, up, down. And so for the trader who kind of has one approach, I'm just thinking of something that swings really aggressively, right? Up, down, but has like, an underlying sort of slight move to the upside, but it's doing it in big swings. A lot of traders would get stopped out using trailing stops on that,
Oh
if you
yeah.
can imagine. You're
Or
also going to
they
get a lot of traders
or they get whipsawed quite badly.
whipsawed because they're trying to trade both sides.
Yeah.
Whereas someone who's looking for a playbook, I can tell you that behavior is not in my playbook, so I'm just not even worrying about it.
Nah.
And so the market has to behave in a certain way that matches something that you have got edge in trading, because of all the different ways the market can behave, you're only going to be able to participate and execute, which is important, and have an advantage, a competitive advantage, based on certain market behaviors. So I'm hoping that wasn't too. I didn't miss too many
No. I think that was a
points
perfect.
along the journey there.
No, thanks, Adam. I think that was a very perfect way of actually answering the question. And you talk about edge and the way that you described it, and it does make a lot of sense now because I also read this book by a guy called Brent Donnelly called Alpha Trader. Excellent
Yeah,
book.
yeah. I have learned many a useful um, market related concepts from him. So yeah, absolutely.
And in the book that he was talking about the whole roulette analogy, and how often people think that roulette is this game where you have you have incredibly high odds of actually making it when you walk into a casino. It's like they either want to play, they don't want to play poker because poker is a game of real skill. So it's either blackjack or it's roulette. Those are two of the most popular games. And roulette gives you this false sense of security because it's how difficult can it be? It's only red or black, right? But what they don't realize is that if you take a game that has exactly 50-50 odds of winning or losing, then the chances of you doubling your money, say from $100 to $200 at the end of the night, is of course 50-50. But if I drop those odds to 49.5%, so just by 0.5%, what do you think the odds become of doubling your money by the end of the night if you place $1, $1, $1 on every bet?
They're significantly less the more times you play that game, because you'll let that negative expectancy develop and build against you.
Exactly. So those odds, to just kill the anticipation here, drops to 11.5% of doubling your money.
Okay. I didn't know what it was specifically.
Yeah. So it drops to 11.5% of doubling your money by the end of the night. And if you drop those odds to 49%, so we're talking about a 1% drop in odds, that positive expectancy, the probability of that positive expectancy drops to 1.8% by the end of the night of doubling your money. So you have a 98.2% chance, well, you have a 98.2% reduction in the probability of doubling your money by merely dropping your odds by 1%. Crikey, that is, I mean, I went all Steve Irwin there, in
I just appreciate the Australian reference.
Yeah, but gosh, I mean, that's insane. But here's the other bit about roulette wheels that people also don't know. An American roulette wheel has odds of winning a 48.6%, and a European roulette wheel 47.8% or something.
Yeah, because one has a 0 and then a double 0, doesn't it?
Yeah, it's 36 and 37 numbers or something like that. So, but just that double 0, the law of large numbers gives casinos the edges. And that's why the house always wins over large numbers, and that's why the market always wins over a large number size if you haven't got edge.
Yeah, and I think you hit the nail on the head, the law of large numbers. So edges has to factor in the law of large numbers. So one thing we're prone to is recency bias. So, I've had, a winning day. And we've all fallen for this trap when you get on a roll, and this is how you learn these things, unfortunately. None of these lessons, even though people tell you, you learn these lessons the hard way. Your recency bias thinks now that you're just this killer. And of course, all it is just bumped a bunch of winners in a row. If you look at the law of large averages, it's an anomaly and it will flatten out. And if you start taking poor trade decisions because you're actually trading based on this notion that you're just some killer now, it'll come back and haunt you. And that's why so many traders, after they have a big run, give back a chunk.
Oh yeah,
because it takes a while for
that.
Absolutely. Also, same thing. But the takeaway is like how many, and you can beat yourself up with it, but then you start to realize that as long as you can take away that you just fell for recency bias, because it's one of the cognitive behaviors that humans tend to, you call it a flaw if you like, but it's
we
very
can't
common.
Get rid of it. It's
no, unless you're aware of it and you stick to a process. So one of the things I was going to talk about with playbook trades, when I gave that analogy of like something with those aggressive swings, what's really important for any of the trades that I have that I place is that, there's an idea there, and I can be looking at the market and I'll naturally have an opinion, right? Oh, the market will do this, the market's going to do that. And unfortunately, I can't switch that off. That just happens all the time. But over time, what happens is as you get with things that you're doing with trading, when it becomes more like driving a car, that voice, you get to kind of like evaluate it more, rather than like when you're first driving in a car and you're like all freaked out. But once that's the skills become unconscious, whatever's going on in your mind, you can kind of go, yeah, well, that's not very helpful. I might not pay attention to that. So for me, playbook trades aren't about finding winning trades. It's about engaging in the market with having really tiny risk to find out that I'm wrong. So any of the trades that, for me to develop a trade that I is part of my playbook, for me to enter it, I already know that my risk is minuscule, right? That trade will tell me very quickly, without much movement in price, not much damage to my account, and your confidence, etc., that I'm wrong. And so sometimes you can have a scenario where, and it happened to me today, where it took me, I think, 3 goes at one trade before it paid. So I had a small loss, like a paper cut, a scratch, and then it paid. If I was all about, hey, I'm just going to trade my idea, it came off quite a bit between that first, second, and third go, that more than likely I just would have taken a painful loss and then not gotten back in. So that's a really important part of developing playbook trades, is that it's not that you find a trade that just wins. That's almost insignificant. It's that if it, and most, this is pretty standard, and it's helpful when you've worked with a lot of other traders. Most guys intraday who produce consistent results, not, like good risk, what they call risk adjusted returns, they're only right in the 50s, 50% of the time of winning trades. It's that you've got all those ones where you're wrong that are just minuscule. Even if it means you have to make the same idea, it's just that your timing was wrong several times. So that's a really important part. And to me, when people talk about process in trading, process for me is engaging in the market in such a way that you don't get hurt. All right. So you can deal with small paper cut losses, but it's the, letting yourself lose a limb that is hard to come back from.
Yeah.
Again, it takes experience and doing lots of numbers and getting past recency bias and all of those things to learn that, like deeply believe it, not just, oh yeah, sounds good. As you know, it's very much an experience-based, what was I going to say? Field
Profession.
trading. Yeah, field. It's a performance-based, experience-based field. So a lot of it comes from doing. So what I'm just thinking about where we've. So one other point about, I touched on it, just with finding ideas that are a bit unique. One of the things that I see traders do, and you can see this in forums and things. Oh, what do you think of this pattern? Does this have good edge? I mean, it's not something I go and read now, but I remember from years ago. I'm sure it hasn't changed. The problem with that is that they're all trying to look for the same deal.
Yeah.
And if you've ever changed, the best analogy I can think of is, and that's what you call the crowded trade. And crowded trades don't pay. So you need to find unique ideas. And the best analogy I can think of is when I've been to Thailand, and you go down like the tourist strips, and there's literally 30 or 40 shops all selling the same stuff, right? So they're all selling the so-and-so knockoff singlet, the so-and-so knockoff, like identical. And so there's 30 of them all. And so all they're doing, they're in a crowded market because they're the crowded supply. Their shops are absolutely chock-a-block with merchandise. And all that's happening is people are beating them down on price because they don't have any edge to survive. And in some respects, it's quite upsetting, because you're realizing that people from a different culture are trying to, work within a Western type. So anyway, that's probably a discussion for another time. But to look at it objectively, many traders are like those vendors, right? They're in the same street with all of those. And so it's a losing proposition. So you have to find unique ideas. How do you do that? Well, I think one of the good starting points, there's a book by Jack Schwager, who he, of course, wrote the Market Wizards book. But there's one of the most interesting, and maybe it's because it's the one I have read most recently, and that's the one on the unknown market wizards. Have you read that, Adrian?
No, I haven't read that yet, but I know of the book.
Yeah, it's such a great read because it shows some of the things that people are doing that is really unique. And it doesn't mean that you have to, again, don't duplicate what they're doing, but sometimes just
Mm.
by being exposed to what others are doing, it makes you go, oh, what if? And that's all you want to do. You want to be looking at the markets, not based on what everyone else is doing, because you want to position yourself in the uncrowded trade, which is why myself and others who have any trades with edge, we do not divulge them, because if we crowd that trade, we're going to lose that edge. A lot of playbook trades never last forever. I've run out of good
No.
names. I used to have all these rippers, the bread and butter trade and the long liquid lunch, and neither of those work anymore.
Because the market
They've become
environment
crowded.
changes. The market
That's
environment,
right.
it's a dynamic thing, I've often had to explain this to people who are not into trading, and how can you expect someone to know what they don't involve themselves with? But the market is a very dynamic organism, and the market doesn't care about what you want or don't want. It's neither for you nor against you. It simply is. And that's the reality we have to face, though. The structure changes a lot more frequently than what we think it does. Like I'm friends with a guy who's a hedge fund manager in New York, who also said that they don't even look at overly long-term data anymore because the structure just changes too rapidly for that long-term data to be overly relevant and profitable in a modern context and setting. Which I thought, okay, that's a very interesting way of looking at it, because he said that obviously it's important to understand what happened in the past, but we can't base the modern world based on past actions. And he said the only thing that has not really changed over the last 5,000 years is the fact that markets are auctions and human behavior is still very much the same that drives those auctions. But the way in which we auction now and the way in which we trade is very different. So, we're not fully accustomed to all the toys that we have access to at the moment. And I think electronic trading has definitely been a boon for some people and a bane for many others.
Yeah. And I know who you're speaking of just based on what you said, who that is. And it makes me think of those and I know someone who still to this day is not making money using the turtle method, because that thing stopped working. I don't know how many years ago, but
I agree. It's no longer working.
It doesn't work anymore. And that's going back way more historically than the example that you gave. God, I just had a thought. What the heck was it? Doesn't matter. It eludes me. Oh, actually, so when you're talking about the market just is, so you were talking to me about your interest in jiu-jitsu, and
Yeah.
with that comes some of the Eastern type philosophies. And one of the most significant trading lessons for me, and I don't know if you find this to be the case, but they tend to come to you not from trading. So they come from outside of trading. But it makes sense because, as you said, Adrian, markets are people and people's natural behaviors, right? The auction. So that hasn't changed. So that's where you can take a lot from just understanding people and then see that those things act out in the market. In fact, if you want an edge, work out what it is you naturally do that doesn't work. Like you've got empirical evidence, and the guarantee that you're just one of thousands who do exactly the same thing. And so now you've got the opportunity to actually take the opposite side. The next thing is you've got to try to find that trade in such a way that it minimizes your risk, because the crowd isn't wrong all the time, just most of the time. So you can't just sit there and bet that they're going to be wrong. So you've got to be able to engage in it in a way that is limits your downside. But this is a joke I have with clients. It's like, I'm just Adam version 2 trading against Adam version 1, or Joe version 2 against Joe version 1. Use all of those things because they're an advantage. But back to sort of, so I have found yoga to be really helpful, in particular Ashtanga, and
very potent
one of the
yoga that.
Yeah. In fact, a lot of hedgies practice it. Paul
Mm.
Tudor Jones is one.
Oh, I didn't know that
And
about PTJ. Oh, okay.
yeah, he goes to Mysore every year.
Mm.
So, but there's another few, and a gentleman who works with a few of these. I had not with Paul Tudor Jones, but certainly with some other hedge fund guys from New York. They fly him over, and the reason why they do is that they're trying to surrender, right, to basically the market is,
Mm.
and you have no impact on it. So the example that he gave, and this hit me like a ton of bricks. We were sitting around just having a chat post practice, and this is someone who's now in his 60s. He's been practicing yoga. He's very high up in the, all the different levels in Ashtanga. And so the number of times he is, the first, what they call salutation, starts with reaching to the sky, and then you, in a standard position, then you bend forward to touch your toes. Right, that's part of it, right? Now, he would have touched his toes thousands upon thousands of times. Yet what he said is when he goes to bend forward and touch his toes, he doesn't have an expectation that he'll touch his toes. Right? This is someone who's done it and still, and probably will do it that day. But what he
Oh.
says is, I listen to my body to let me know how far to go. So what he's doing is he's aware of what the practice is, but he surrenders to something outside of like his conscious mind, which is just listen to your body. And so if you're practicing yoga correctly, you shouldn't get injured. So when we take that thought process to markets, you want to cultivate this notion of indifference, right? So you put on a trade and you do not know what the outcome is going to be. Now,
No, you
is it
never
easy?
know.
No,
You never know what the
no.
outcome's going to
But
be.
it takes work, don't you reckon, Adrian? Like
Oh,
ongoing
totally.
work
Yeah.
to think that way, to be able to develop that sense of indifference. It's not something that it's unnatural because we naturally want to have control. We don't
Mm.
like being in the unknown. But this is the reality of markets. And this is why the traders who are really advanced, often people say it's all in the mind. Well, you still need a skill set. You can have all the greatest psychology in the world, but if you don't have an edge, it's not going to help you.
No, of course.
They've, yeah,
It's like jujitsu, for example. You can have the best and strongest mindsets and stuff, but if you don't know how to execute a submission or
yeah.
defend against submissions, it's not going to help you very much. You'll
No,
just
that's right.
you'll
So,
just feel
so
good
you
about
can
yourself, but that's it. That's as far as it goes.
you'll feel good. You'll feel good about losing,
Yeah, yeah, yeah,
because you can't
exactly.
execute. So you'll feel good about losing. Yeah. So I think when you hear people reference that, they've actually surpassed all of the technical side of it, right?
Mm.
Because the only way you can say it's the only thing now that I have to deal with is my mind is they've obviously got to a point of mastery or expertise, if you like, of the mechanics of it, executing it. Um, so that's for me. It's about, like, I'm not sitting there going, I want to have a winning day today. I prefer a winning day. I'm not going to. I get frustrated, like all of us, but some people have some unrealistic ideas about what trading's about, and this is one that I see come up often with traders I work with, and I'm particularly um, aware of it because it's something I dealt with, and that is, what does a trader do, Adrian? What's the definition of a trader?
To me, the definition of a trader is someone who looks for opportunities in the markets, executes on them, and tries to exploit them in a positive manner.
Okay, so if you're sitting at your desk, you've been there for 3 hours and you haven't executed, how do you feel about yourself?
I do get a bit edgy about that at times because
Exactly, and that's the
and
point I was trying to make.
yeah,
Yep.
I'm not going to lie by saying that I don't feel edgy, because to me, I feel like, don't get me wrong, like yesterday, for example, while I was watching the ES, I didn't see any opportunities that made me go, wow, I've got to be involved with that trade. In fact, I saw more opportunities to get nailed than what I did to make money based on the way that I trade. because in this kind of environment, I'm looking more for scalps than what I am for larger moves, given the incredible uncertainty. It's like last week we had Bullard come in. I had a good day, and all of a sudden I started losing when Bullard came on and just started making comments that made the market go erratic. And other days I did very well, and I also realized that some days I get very lucky. Some days I make my money very, very quickly, and whenever that happens to me, I step away from the screen and I walk away, because I know that the odds of messing up increase quite exponentially at that particular point. And the other thing that I've also picked up, for example, is making money is addictive. It's a very addictive feeling. So if you do that, and in my instance, for example, if I feel that euphoria start kicking in, that's where I just go shut down, because now that dopamine addiction is kicking in. I need to step away, reassess, either do something else or come back a bit later once I've calmed down and rebalance those scales. So yeah.
Well, there's two really good points there. I have to write one of them down so I don't forget.
Go for it.
So I think what is challenging for traders is when you first ever thought about the idea of it, it's like someone who just buys and sells.
Yeah, totally.
They're buying and they're selling so if you're sitting there not doing that, you start to think of yourself as actually failing or not doing a good job because you're not buying and selling. And so this is where for me it was cognitive behavioral therapy. So I worked with a performance psychologist, and it's been fantastic because that same understanding and the knowledge and the tools that I gained from that, I've been able to help pass on, because I see that, but I felt like I wasn't, even though they don't say it, I can see it in someone's trading when I go through it. I wasn't trading, and I know it's not conscious. It's this unconscious, I'm trading, so I must be buying and selling. And so that's a really important.
I think it's FOMO in a way. Some people call it FOMO, where you fear of missing out, and so you feel you need to get involved.
Yeah, I think that's almost separate, Adrian. I think it's that we have this unconscious idea of what doing your job properly looks like. And if you're not buying and selling, you're not doing your job. So that's where you have to redefine what trading is. Trading is not losing money. Just read Market Wizards. Don't lose. Every trader in that book, like the first one and the second one, they all trade differently, but the biggest takeaway, and I read this, it's going back a long time now. It's in my, it's like half my age ago, if not more. All of them are don't lose money. Don't lose money. Paul Tudor Jones talks about it all the time. Don't lose money. And so if that's your focus, then you're very strict about when you should actually put money at risk. Right. So I know that it might even be controversial. What I'm saying is because, don't focus on not losing money, but I'm not meaning trade scared. I'm saying that you can only trade when you can put risk on. But the important thing is trading is not defined by buying and selling. So that's one thing. And the other thing too is on that, people can beat themselves up unnecessarily. So part of what I do for myself, and it's called the quiet hour, which I learned from an insurance salesperson, believe it or not, many moons ago. And you got to sit down and today, a good day, I perform well, making how many mistakes is it okay to make to perform well? How many trades, how many moves can I miss that still means that I am high performing? Because otherwise you can create these unrealistic expectations. And as soon as what is unrealistic, what you're setting this sort of bar that's unrealistic, doesn't matter what you do, you're not going to achieve it, and therefore you're going to beat yourself up. So there's a couple of things that are important. And then just on that, when you said you get away, so one of the things that and this is what I learned from, again, working with another trader, a highly successful futures trader. It's a term I call expansion. And it's just a word, but to me, it has the meaning that everyone knows what the outcome now is in the market. Go away. So you can have a great trade. And if it's that point at which, if I sit and put this chart or whatever in front of a class of kindergarten kids and say, is this going up? And they all say, yes, yes, it's going up. That's the point at which you do not want to be in the market anymore. Will you miss some continuation moves? Now and then.
Yeah.
But most of the time, if I, like even today, expansion, get flat, it is incredible. And it's just based on so it's not like a mathematical calculation. It's literally a visual thing to go, at what point can everyone see, oh, this is going up? That's when you get out, and that's coffee time. Walk away from the screens, come back. Because then what happens is, then it's this dogfight between buyers trying to, take it further, sellers wanting to short it. And it's this very complex, nasty stuff that if you continue, you'll just get back everything that, like you said, that you've just put away in that first trade. So there's a lot to be said for the early bird
Yeah,
gets the worm.
that's when the piranhas come in and they start feeding on the carcass. You were one of the early birds who started pecking. And I think there's also a big misconception in trading that every day has to be a big money maker day. You can actually do well on a few $100s a day or on $1,000 a day. Actually, even $1,000 a day, you're doing pretty damn well. If you're like a retail guy just doing that. But you can actually make a very decent living off trading, and you don't need to be a Paul Tudor Jones or Stanley Druckenmiller or whoever to actually be doing well for yourself. And I think it's also, like you said, these unrealistic expectations that also start forming. Oh, if you're a trader, you must be coining it. No, not every trader is coining it. It's absolutely not the case.
Yeah, there's something that I call the playing field, sticking in your playing field. So, and this is Linda Radford Rashke uses the same
Oh,
term, but
she's
I'm not really sure
brilliant.
what her meaning for it is. But for me, depending on what the playing, I have two ways to think about where the market's moving at the moment. It's either in inner city traffic, that's not where you're going to get the big moves,
No.
or it's the open road, right? And so in Australia, we're a big continent. Once you get out of the city and you start driving to the next major city, it's all one way and there's no traffic. They're the trades that pay. So if you know that before you're in the trade, that's the time when you're hanging around, potentially having a trade that you can add to and scale up in. If it's inner city driving, that doesn't happen, but that takes a skill and awareness of the market environment to know when you have decent paying days and when it's going to be hard work. A few points here, a few points there. But something I will add, this is I should have pulled it off the wall before we started, so I won't pull it off now, but I have a framed above my trading desk where it says, it's actually from Patabi Joyce, who developed Ashtanga, and it says, I better read it to get it right. Do your practice and all is coming, by Sri Krishna Patabi Joyce. And yesterday was probably such a great example or reiteration of that. As long as you roll up and do the same thing every day, like yesterday was like, a 70, 80 basis point move in the Aussie dollar, just out of nowhere. And if you're trading that as I was, they're the sort of days that are these monster days.
Like trend
but
days.
I didn't know those big, but I had no idea that was going to happen this time, before the session started. It just developed into that. I know about my playing fields and things like that, and I'm happy to get out of the market because it's hit what I call it's hit the boundaries. It's like the footy field. It's like, no, I don't want to play right at the edge of the boundaries. I'll just wait for it to get into the next playing field and be definitely there. Then I can re-engage. And so I'm often in and out. But what that does is it means that it stops you from being in something and giving it all back, which can happen a lot too. But that notion of just do your practice and all is coming is a big part of trading. That's why when I'm sure you find this is the same, when you look at your monthly stats, it's like, oh, that day. Oh, what about that day? And then you see all these grinding days, and the ones which you remember the most are the grinding ones because they're the ones that make you sweat and you get the least return on them. But you have to actually be there and sit through those.
Those are the ones that give you fitness. They're the ones that keep you fit. If I
they
can
do.
put it that.
And the thing is, if you weren't there to do that, you would have missed those other ones. And so it's just that notion of just do your practice and all is coming. So I'm
I know.
sorry to give you all the
Yeah.
Ashtunga
No,
references.
no, no. I actually love that. Because I also know a few traders who say that they make their big money on sometimes 3 or 4 days of the month. It's
Mm.
it's not actually that uncommon to hear of guys who don't make a lot of money on most other days, but it's 3 or 4 days that make up for everything because they catch a big trend or an FOMC announcement or inflation announcement or whatever, and that's that. They make the money off those. So I was like,
Yeah, because
okay.
it's those days that you talk about. This took me a long time to learn. So one of the areas that I really struggle with is, okay, now I've got to try and size up my trades. I'm sure you went through this when you're like
Oh
trying to
God,
size up your trades.
still do at
and
times.
and 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 like when you were first doing it, all I did is go backwards, like by just I'd add to trades and then I'd just have an overall loser, and it was just like, oh, it was such a
Ouch. Yeah.
painful period. I
Mm.
reckon it took 2 years of me trying to work that out. um, but eventually I realized that there not every trade you can add to, and that's where I got this concept of the playing field. So you've got to know the environment where the market can move, and when you're in that environment, from an odds basis, and this gets back to playbooks and sample sizes, you know that you can use the market's money to fund that trade so that you're actually not increasing any of your initial exposure. And that's how you get outlier payments. It's not by banging on extra risk. It's not by doing that at all. But I don't know where the book is on that, Adrian, or the 3-day seminar. like this thing about edge and playbook trades and all these things that we've been discussing.
Yeah.
It's just not something that you go onto YouTube and someone, it's just staring at you.
No, no.
Um,
The
so
the the other thing that you also just reminded me of, and I find that people who are not in the field of trading, when they talk to me, that they seem to be quite surprised and shocked when they because this is how the question normally comes. Oh, so you're a huge risk taker and all that. And I would often say, no, actually I'm
yeah,
not. Actually, I'm not. I'm not such a big risk. What? I thought trading was all about taking big risks. You guys are gunslingers. You shoot from the hip. I said, maybe if you watch the movie called Wall Street or oh, aren't you like Wolf of Wall Street? I said, no, that's below my pay grade. I mean, like
that's a
that
sales movie, not
that
a
that's a sales
yeah.
movie. That's not a trading movie. Not even close. But that's a common one that comes up. But it's this perception that traders are these massive risk takers who are just looking for every single opportunity to take risk. And I say, you know what we are? We are risk managers. We are not
Yeah, absolutely.
risk takers so much. Because your first job as a trader, as you said, is to preserve and protect your capital. And the second job is to actually grow that capital. So you're essentially an entrepreneur in many ways, because without your capital, you have no soldiers to deploy on the battlefield.
Yeah, that's right. And I just try to think of it like a regular business. People say this, think of trading as a business. Think of it like a business like any other business. So if you run a cafe, right, you don't suddenly start selling clothing in your
No,
cafe,
exactly.
but that's what traders often will do. They'll deviate out of their core business.
Mm.
Trading's a bit like the Olympics. There are so many different sports, but no one at the Olympics, is
You're a
competing in
specialist.
yeah, they're not like in the pole vault one day and the pool the next. It just doesn't happen. And so once you specialize, a lot of you're not even paying. If you're a pole vaulter in trading, you don't care about what's happening in the pool. You're oblivious to it. It doesn't factor into it. Um, oh gosh, I had another train of thought. I warned you before, Adrian, that I've got verbal diarrhea when it comes to this stuff,
Don't
and
worry,
I
me
and I just
too.
can't can't think what that was. Never mind. Maybe maybe you're lucky and it escapes me. Yeah, no, I've lost it. Sorry.
That's okay. It happens. I probably have mild ADHD too, so I often have a thought and then it just pops out of my head and then it pops back in. So no biggie.
Tends to happen to me because I've been trading all day. So I get a
I
bit
think a lot of
brain
traders actually
fried.
have. I think a lot of traders have ADHD.
Really?
I think I'm quite convinced of it. Yeah, because of the fact that your attention needs to be able to jump from one type of thing to the next. Um, this whole notion that we have to be super focused, I'm not quite convinced about that, and ADHD is also not necessarily a case of your attention span is 10 seconds. You can just divert your attention to something else and then come back and divert and so on and so forth. So yeah, that's why I reckon that there's quite a bit of that in this game.
I remember what I was going to say. So I'm quite I'll admit I'm quite a computer geek, which all came from like the automation days and programming and all that sort of stuff. So I love all my mechanical keyboards and macro pads and all this sort of stuff. And mouse with 12 buttons on it. And so when I was at a prop firm, like when people think about, oh, what trading's like, before the close, I'd be typing away and someone would yell out, stop typing, because the noise interrupted their concentration. So that's how deadly quiet it is with a floor full of traders who are focused on trading. It's nothing like what people have this idea of what trading is. And the other one is, when I try this out, when people ask you about trading, just say to them, oh yeah, I lose half the time. Watch them go. They'll almost feel. They almost.
I'm going to try that one next time.
Yeah, they're like, oh, you poor thing, because this concept of losing is just so far from.
So doing that next time, I swear, I will actually do that.
You'll get a look. People will have pity for you, Adrian. They'll think, oh no, his career must be terrible. I really feel for him. Just tell them that because this notion that you lose is beyond, there's not too many. This is what I say to guys I work with. Embrace that you're in a field where you can be wrong half the time, right? You can't do that as a surgeon or an engineer.
No, hell no. You won't have a job.
No, that's right. And you'll probably have some lawsuits as well to deal with. But yeah, once you can, with all of these things, like people have a difficulty with losing trades, you just want to try to change I think they call it framing.
Yeah.
So I gave some examples before about, like framing what a trader is. Like a trader is not someone who buys and sells. So yeah, you want to embrace losing. I inevitably, not always, but very frequently have my first trades a loser, because it takes me a while to actually, I don't know, like click into gear. Like, oh, now we're right. It's like getting, if you were you a cricketer at all?
I played a little bit of
tennis. But you know what they say by getting your eye in, and when you can hit the ball in the sweet spot, and it takes a while. I find that the sweet spot is not always necessarily there straight away, and it takes me a couple of goes. So what I know not to do is go bang with big size on the first trade, because I know that it inevitably is a loser. And that's something I just have had to accept.
That's actually such a good point, though, because I think that every day, and I never considered it until you mention it now, that your eye does need to get in when you are trading the markets, because every day is slightly different from the day before. So you have to see, okay, how is it moving? Are the upward moves stronger than the downward moves, or vice versa? Does this seem to be a trend day? Is it a double distribution day? Is it a price discovery day? Is it a balance day? What kind of day is it? Because then you can also, that's how you get your eye in.
Yeah, absolutely. And in fact, this is where process, like to me, a process is just the most robust thing that stops you from getting hurt. So if you're finding you're getting knocked about on some days, your process has got holes in it, because that's what your process is designed to do, is to try to factor in all of that. So an area that I struggled with, I've struggled with lots of areas. So one of them was when the pace of the market just got beyond what I can trade in, right? And because I've seen other guys, been around them, trade like in really, really quick markets, I guess there's that sense of competing and everything. But that took me a long time to actually develop the awareness that, hey, this is actually beyond my pay grade here, right? I cannot compete at this pace. So when it's moving super, super quickly, and you got to be like really quick with your
you can't even think there. You just execute.
Yeah, but you might just be slower. Like some people have react slower than others. So I know that there's a cap on my pace, but that was one of those lessons that took a long time to learn. Just thinking of specialist, a trader I worked with, this took 3 years for him to get to this point. But I think it's a good story to just emphasize something that we were speaking about before. Like I said before, all the people that I work with, they're, they've had years of losing, and it's finally like, okay, that's it. I'm serious now. I need to make a change. So 3 years after working with me, he finally, had a 7-figure year, just under a 1.5
That's good.
million.
Yeah, that's a freaking
Yeah,
good. Yeah, I would
yeah,
like
and
one of those.
and that
I'd
set
like
him
one of
up, and
those for sure.
now he's his dream job, which is he's running a fund, right? His own fund. That was his dream, his
Mm.
motivation. But what it's not so much about how much he made. I just mentioned that because he didn't make that 2 weeks after meeting me. Like,
No,
it
no, I'm
took
sure.
continued work.
Mm.
But what is fascinating, that was essentially two different trades, right? So one
Wow.
playbook trade, and then I call the other one a half playbook because it was really a hybrid of the first one. And there was a period where it just kept working, and he would wait. And to his credit, he could sit there and not pull the trigger for hours until that trade came up. And for most of the time, that meant sitting during the Asian session, not doing anything, and having to tell his wife he wasn't coming home because he would be at the office late, to the point where he's Italian, so he's got he put a like a pizza oven in his office, and
What?
yeah, and and a weights room. Like, I've
Oh,
seen all the pics, and a weights room. And so when he would be sitting there, he'd have um like dumbbells, um that he's got this apparatus so he can just do leg raises under the desk.
I've got these.
Yeah, well, you need to lift your
Uh,
game. That's not, you need something for your legs as well.
I do. If I had space, where I put a squat rack in some deadlift mats and all that stuff, and I would just be cranking out heavy lifting during during the session. But yeah, I haven't
Yeah.
got space for that, I'm afraid.
Look, I'm very spoiled. I have a strength studio next door,
Oh
literally next door.
gosh, come
So
on. How lucky
I
can
see
you
it.
get?
I know. So I see. I do work with a trainer just 3 times a week. It's fantastic. So once you get to my age, you need to do resistance training. So
Mm, mm.
particularly when you're on your backside all day sitting. So I hate it, by the way. I can't. I'm just not one. I do it because it's good for me. I don't. I'm not one of those people who does exercise and gets like a, was it an endorphin rush?
Oh, I do.
Yeah. Oh, do you? I'm
I'm quite the
envious.
opposite though. I mean, give me a pile of wood, a big splitting maul, and
And
all
you're
that,
off.
and I'm off. I would literally chop wood all freaking day. I actually find that I sometimes enjoy that more than many other types of activities and things.
Okay.
Much to the dismay of partners that I've had before. It's like, why the hell would you prefer chopping wood, spending time with me? Well, you can watch. It gets your rocks off in any case when you watch me chop wood, and it's good for your testosterone levels. It raises your testosterone levels quite a lot, and testosterone also helps with trading. So it's been proven to have a very positive effect on your trading ability, provided that it doesn't get too high, obviously, and then you become,
Yeah.
well, stupid.
Or with any sort of training, I had to. The reason why I go 3 times, say, instead of two, is I do less than what I did initially, because I'd come back and I was wiped to trade.
Mm.
So we dropped the weight. But what I find it's most useful for is I just talk absolute bollocks to him about all sorts of stuff. And so it's a really good opportunity to not think about markets. Because the
Mm.
first thing you do when you wake up, I know we shouldn't do this, but I'm like, what happened in the US? And, you just, it's so, like, so it's almost 24/7, isn't it? You're living it. So one of the things about having a trainer is it's not even so much I mean, the training's beneficial, but
It's
it's
a
that
therapist in a
opportunity to
way.
completely switch off and
Yeah.
talk complete bollocks, and it gives your mind a break. And some of these, again, this is just little tricks to help. Um, I've got a mate who used to trade on the Sydney Futures Exchange when we had the floor, and so for him, he trades still. He's older than me and still trades like crude and the ES, which means he's up late. His rule, and it's been there forever, is 3 losing trades, goes for a jog around the block. right?
Mm.
But obviously he loves that. There's something about that jog that just, and he still does it to this day. So
Wow.
3 losing trades, off he goes for a jog. Doesn't matter what the weather is, he's off. And
I
it's such a
find,
bizarre
yeah,
time to trade, like go for a run at 2 a.m. in the morning.
I find that one of the things about training is that it has a lot of carryover. So you're not only just keeping yourself healthy, but you're also developing your nervous system. And when you develop more neural pathways, you actually keep your brain sharper and more active for a lot longer than what you would without doing physical movement. Because physical movement has actually been the single biggest cause of our development and evolution, contrary to what many people might think.
Yeah, there's some fantastic stuff on this. There's actually, you probably follow him, an Australian who talks about, who's quite well, um, he's well renowned in like slowing aging, but really what he's talking about is getting the most out of your brain and everything as you get older. Because certainly as you get older, you have to be more mindful of it. It's
Yeah.
funny, on weekends, I like to just, for a good part of it, I mean, I enjoy that. Because I'm trading during the week, it would be unfair to do a one-on-one session with a client of an evening, because that's not fair on them. I'd be brain fried.
Yeah, it's your
So I'll do
pitsy
that
time.
on, yeah. So I'll do it on weekends. But if I'm not doing that, I'm just somewhere not speaking.
Yeah,
I'm,
I
go to
don't blame
go to a
you.
cafe, take the dog, have some time out, and just you actually feel like your brain just wants to reset.
Vegetate,
So
yeah.
yeah,
Well, even the saying busy as a bee is so inaccurate, but the whole thing, something that I've noticed is like when I catch up with certain old friends, I'm not calling anyone out here, any of you listening, by the way. The whole phrase is how have you been doing? No, busy, busy, busy as a bee. And I'm like, okay, busy doing what? Bees are not even that busy. You do know that bees also chill when they're not actively going out seeking pollen and to create more honey and all that. It's actually a true thing, by the way. It's
well, so now when they say, "How about Adrian? Adrian, what have you been doing?" You can just say, I've been as chilled as a bee."
I love
And
that.
they're like, what? Huh?
Yeah, no, chill as a bee. I think it's important, and that's what I've noticed about being a trader and having done martial arts and done lifting and all that kind of stuff. Even when you do a workout, you're not continuously working out for an hour. There are rest periods in between too, because you need to recover. So it's no different when you are trading. I would say that I execute about 5% of the time that I'm actually sitting at the screen, because I'm looking for certain opportunities, and then I'm monitoring them, and then I'm in game mode. I call that game mode when
Yeah.
you're actively involved and you're zoned in and you're doing your thing. But a lot of the time, I think good traders need to be able to be people who can wait. You need to be able to wait for
And
things to show up
conserve
to you.
mental energy. So
Yes.
one of the things that, this took all of these things take, well, certainly in my case, a long time to really sort of learn, is that it's no good being in subpar trades because you'll sit offside for a long period of time. And guess
Oh yeah.
what? You're just chewing up your resources.
And your
So every
emotional
time you're,
capital.
yeah, but just the resources to even make good decisions,
Mm.
that's being eaten away at. So if you can develop a playbook of trades that you essentially get on side straight away, and then even a bit of a cushion, as soon as that happens in that trade, that's that natural. I mean, God, I have losing trades every day, and I make thousands of trades, month to month, but yet I still don't like being offside in a trade.
How much time do you normally give yourself before you decide, okay, I'm offside too long and that's it, I'm cutting this trade now? Because you said,
So it's not really a time thing. It's, I wait for the market to show me that I'm incorrect. But because I trade such a minuscule tick setting, for me to get offside, like 5 basis points is a big deal, right? In
okay.
the Aussie. So that's like a huge, like I don't need to get offside that much. Now and then there'll be a liquidity, pull of liquidity, and I might get knocked out. But most of the time it's just a couple of basis points or scratch. The first exercise that we ever did when I was at a prop firm is make or lose a basis point. That's it.
Mm.
or was a tick actually. And so that was that being really good at getting on side, getting
Yeah.
on. And for listeners who don't know what I mean by that, what you're doing is you're reading the tape. And so if you're buying in such a way that the where you've bought, you can then exit by selling into the bid at the same price that you bought at. So that's referred to as being on side.
Got it.
So what you don't want to do is be offside. And obviously it's the same, but in reverse for selling. So that's part of your skills in reading the market that you can get in, and you'll have plenty of times a trade that just you go on side and then you get a bit of a cushion, and then it doesn't work, right? So just because, but that benefit of having it go your way just a little bit means that now you can work with not losing money or having a paper cut. So that's a really important part of trade selection, because many people focus on, they just want to catch a move that moves or catch a trade that moves. And that's why I said not all movement is opportunity. I want a trade that I can get into and be on side in, and ideally get a bit of a cushion. Most traders will say this: the best trades always work straight away. Right? Rarely does a trade go offside
I think
and
Jesse
then pay
Livermore,
you.
yeah, I think Jesse Livermore said something very similar to that too. He said he always, I know it's a different time frame. I mean, he traded in the
Yeah.
1920s for anyone who doesn't know, but he always said that if a trade doesn't work out or start working out immediately, cut and move on. Find something that actually does. And maybe there's merit to it, but there are other traders who also say that sometimes you have to take a bit of heat because the market often goes against you at first, and then your idea starts playing out. So who do you believe? That's the tough part over here.
So it depends. Like if you're in a momentum-based move, right? So you'll have different types of phases. So for example, like if there's real momentum in a trade, I want to get into that and be on side plus a bit immediately, because if that, and they're the ones that I cannot allow to go
Are
offside,
you
because
talking
you're getting it.
like impulse trades, for example? So you don't want to
Yeah,
fade
when the market
an
is
impulse
really
trade.
moving. So
Okay.
let's say there was some definitive covering or some news has come out. If you're in that and it's moving really quickly, that's a different scenario to like a grinding move that might be in one of those really high acceptance areas where there's a lot of rotation.
Yeah.
And so in there, you're trying to work like, in the first scenario, you might even just lift the market. You might go in at market because you haven't got time to try and work a limit. Whereas in the other scenario, you'd be working a limit order to get filled, and you may be offside just a bit, take a minimal amount of heat, but you shouldn't need to take a lot to be wrong, because I'm all for take a little bit, get out, get the paper cut over and done with, and then wait for the market to show you it's the next time to move. But that's also indicative of my trading approach. So I don't have an issue with traders that are okay with taking heat if they've got a long, or I should say a sizable sample size of that trade paying them. So it's horses for courses, depends on how you trade and also the instrument that you trade. But for me, certainly, and I just don't like being offside. It's not my thing. I don't like using up the mental capital. So
No, it
I
doesn't
want to.
feel good. It doesn't feel good, does it?
I mean,
It never
you can
does.
accept that you're not, like, you can accept it, but more often than not, a few basis points offside is going to be a losing trade for me.
I got it.
So if you're, and again, I trade one instrument, so I can do this because I've traded the one instrument.
Yeah.
Hour after day after week after month after year. So you know that instrument's behavior, so that you can do this. So there's no need to get offside. And there's such a huge advantage to specializing.
I agree.
But again, I only learned that because I got to a firm and all they did is trade one thing, right? And you could add other things along, but you had to get your performance up in, the bread and butter.
Oh yeah.
Before they let you onto the grown up stuff.
No, I totally agree. Yeah.
So and all the firms that trade their own capital, because that's what a prop firm does. You'll find that they're very similar in the way that they operate. You got a risk manager. One of the things, this is something that was a takeaway from me. I tell traders, don't watch your P&L. Don't have it on the screen. It's very rare. So in prop firms, you'll often find there is actually an external risk manager who watches that, because you've got a max loss, which I think is fantastic, by the way.
I
If
think
you
so
have
too.
a max lock that someone can just cut you out. But you'll always have a mental idea of it, but you couldn't actually see it yourself. Because if you're watching that, guess what? You're not watching the market,
That's true. Your
right? So
attention is diverted.
yeah, so why not just remove the? It's like if you put a chocolate cake down in my kitchen, man, I'm going to keep every time I walk past that, I'm going to get closer and closer to having a bite. But if I don't have one, I don't have to worry about it. So if you have that P&L just sitting up there staring at you, if you've got to try and not look at it, that's too hard. You
Yeah.
just want to be focused on the market. So these are all things that, here's another example of dealing with, you know, not having too much mental, unnecessary sort of mental juice getting used up. So, I alluded before to changes of different market times and looking for things. So that's really important to how I trade. But do you think I can friggin' remember when, just even though it happens every day, that I'm just naturally in this, so and so market will open in the next 15 minutes? No. So I have all these pre recordings that just tell me,
Mm.
right? Hong Kong is about to open. Like, I have all that stuff pre recorded. I want to try to limit, my ability to have to rely on my own memory
So you don't
as
want
much
decision
as,
fatigue. So you want to reduce decision fatigue essentially to an extent. Am I understanding you
yeah,
correctly there?
but it does, Adrian, but it's not that I went into it for that reason. It's
Uh,
just because I sucked at remembering, right? I'd forget, oh man, I can't believe, because you can get so caught up in something
you
else. Like,
can. I've been there.
some news can come across and you're like,
Mm,
oh, I need to find out what's going on here. And you'll forget, even though the clock's in front of you, that in
mm.
10 minutes a different session's coming on. And all of these things are just solutions to problems that you can eradicate, whether it's reframing what a trader does, whether it's having alerts go off for all data, any event data wise. I have Arnold Schwarzenegger's voice that says, get out. I don't know what movie that's from. And it just yells out at me, Um,
Terminator.
it's like, get out, get out. The worst is when there's like a whole lot of data events all at once, like often happens during the European market. It's like, get out, get out, get out, just constantly. Um,
Okay.
but you know what? I get out. I'm flat. So things like that. I think if some brokers offer max stop limits or risk drawdowns for the day, I reckon that's a godsend. Whoever's You want to be using brokers that do that,
Yeah.
because again, oh yeah, I'll stop if I have X on over. Now I can make it back. Why? Like, now you're not even thinking logically.
No.
um, that's you've deviated from thinking in terms of odds. Now you think you know what's going to happen, but you're vulnerable when you've been punished, I think.
You are. You're not thinking
you
straight.
know
No.
yeah, you're vulnerable, and you might even not feel uptight. Your heart rate might be fine, but just a few things can not go your way, and you can be vulnerable. And what I think trading over time teaches you is that it only takes a little bit of vulnerability to lose money
Oh yeah.
and get hurt.
Oh yeah. Definitely.
So yeah, so I'm conscious of how long I've been talking your ear off, Adrian.
No, no, it's absolutely great. I mean, I'm loving this. I do think we have to start. Wow, we've been talking for that long. Good Lord, I didn't even notice. But yeah, I think we have to start wrapping this up. Otherwise, the episode will get a little bit too long. But
Sure.
you know, this has been a fascinating conversation. I mean,
I've
there's
enjoyed it,
absolutely no
Adrian.
question about that. And thank you for your time, Adam. Where can people find you? If they're looking for you.
Yeah, sure. So I only recently, well, in the last, I suppose, year, started posting on Twitter. So, and I don't know if you find this, but where do people find the time? Like I'm busy trading all the time, so I'm not as active as some of these people who
Mm,
post all the time. But that's my site, and so a lot of these things that I've just spoken about, I like to try. So during the course of the week, I should say I have traders that I'm working with watch what I'm doing, and I want them to emulate it. And ideally, I want them then to go, okay, now that I understand what he's done and I've seen him do it, and I've tried to trade along, now I'm going to nick off and I'm going to go take my
yeah.
system into playback and do it
Mm,
myself. So that's the model that I use. And then there'll always be something that I think, gee, that was a really good lesson this week. So I'll put that into like an email, and as long as it's not anything that's because I have non-disclosure agreements with clients.
of course.
If there's nothing that's under NDA, I'll quite happily share that. So people can go to the site, and it's very easy to join a weekly email.
Okay, perfect. I mean,
That
thank you
expands
so.
on this. Yeah,
Yeah,
expands. Sorry, I was going to say so expands on these things, but actually uses real market examples to help kind of make the point.
I would very much love to have you on again for a follow-up conversation sometime, because I think we didn't even get to delve into quite a few other things that we said beforehand that we wanted to get into. It's amazing how
Yeah.
the conversations just diverts into different directions and stuff. But Adam, I just want to say thank you for your time and for all your insights and things. I mean, I certainly learned a hell of a lot today, and you've given me a lot of food for thought to
Oh, and I appreciate it, Adrian. It's been great, and I'd it'd be great to continue chatting. And you and I have listeners may not know this, but you and I have similar careers paths as far as how they
yeah,
started, and
yeah.
so there's some things overlap there. And while I don't get out and wrestle with other people, we have some interest in some Eastern philosophies as well. Um, as far as how they
Yeah,
and of course you've been telling me off for how much coffee I drink, which I appreciate. So that's good.
that's really yeah, I agree. There are many overlapping similarities and qualities and all that. Yeah, and it's always great connecting with someone who tries to look at the world and the game in a different way. So I really respect and appreciate that about you.
All right, fantastic. And I'm hopefully some people, if they're listening to it, can get some value too.
I am sure they will. So that's it for this episode, everyone. Hope you enjoyed it, and yeah, peace out and enjoy the rest of the day. Cheers, guys.
All right, cheers.
Thank you for listening to the Black Heart Red Spade podcast. For more information, please visit our website at www.blackheartredspade.com or follow us on Twitter at BHeartRSpade.